This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is the simple support line that I've been using for the past several weeks now. As I was mentioning during the past several reports, still long from this long trade right here, the double bottom. We have the slight penetration just beneath that first low over here. And I also mentioned that if you did enter on that position, I might like to take at least a little bit of profits here near that 90 figure, and then moving forward, the ultimate target would be the opposite side of the previous support line, which should now act as resistance moving forward. Also, and probably more significant and relevant, would be the longer term resistance line formed by just connecting the most recent highs, and that lies right now near that 92 figure. So if you're long right now, if you're continuing to be long again, I would just take at least maybe a little bit off the profit, a little bit off the table in terms of profits, and then hold the remainder for that 92 figure. The next chart is the Aussie Kiwi, and in this pair, obviously we're still short from the doji candle appearing here, placing our stop above that 129.35 high. I did add this shorter term daily channel line, and prices we could see broke out above that line, so you might have gotten stopped out here on that trade idea. But again, as I mentioned yesterday, this is a very short term trade idea. Moving forward now, if you're still in that position, still in that short position, I still like the trade with your stop above that 129.35 high of the doji, but again, for some traders that might incorporate a little bit too much risk into the trade. The next chart is the Pound Swiss, and not much has changed here. Still just patiently waiting for prices to come down and test the longer term support line formed by connecting the lows. That's the late 2008 low, and that's the mid-March low right there. And now we're looking for the third touch of the support line. Again, we'd look to enter just above the support line with a stop maybe 50 or 75 pips beneath the support line. The last chart is the Euro Swiss, and not much has changed here. Again, the sideways price action, prices sort of meandering here, but again, what I'm looking for here is prices to break out to the upside of this consolidation or continuation pattern here and test the longer term resistance line. And again, this would be the same trade that I mentioned on the Pound Swiss, but in the opposite direction. In this case, we'd look to short right at the resistance line with a stop maybe 50 to 75 pips above the resistance line. And again, that's the trade that we should look for over the next 24 to 48 hours. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.